So, any guess on how much is India's share in the global real-time payments uh, by volume in last year?
90%.
A bit too high, too optimistic. Yeah. So it's actually about 48.5%. Hi everyone. Good evening. So the future FOF dates are on the screen. You can make a note of them. Uh, Today we'll be looking to understand the payments ecosystem. Uh, so about 7 years ago, we already covered this topic once, but at that time the payments ecosystem was quite different. It was at just the starting stage at 7 years ago, and it has evolved a lot now. So the previous video has a lot of history and all of how the payments ecosystem evolved in the more historical sense. So if you want, you can check that video also. Today we'll be focusing more on the current state of the payments industry. So I have divided the presentation into 4 parts. First, we'll review some key statistics in the payments industry, and next we'll define industry terminology, explore the structure of the payments industry, and identify the key participants. And then we'll use some listed companies examples to see how the revenue is generated and how it flows through the P&L. Finally, we'll discuss some emerging trends, potential risks, and then conclude the presentation. Uh, Yeah. So, any guess on how much is India's share in the global real-time payments uh, by volume in last year? Uh, so, I'll just clarify what real-time payments means. Basically, it means bank-to-bank transactions which are settled real-time. So, for India, it will be IMPS and UPS, UPI, and it excludes the wallet-to-wallet transaction which are more famous in countries like China. So, any guesses, anyone? A bit too high. Too optimistic. Yeah. So it's actually about 48.5%. Uh, Last year, about 270 billion transactions happened, which were settled real time, of which India accounted for about 130 billion transactions. India is more than the next 9 countries combined together. And after India, we have Brazil, Thailand, China, South Korea to round up the top 5. Uh, yeah. So, if we look at how the payment system has evolved over the years in India, so again, the chart has a quite detailed history from 1980s onwards, but I'll stick to the more recent ones and more relevant ones. So, 2004 is one of the key turning points for the Indian payment system, where we had RTGS and NFS coming online, National Financial Switch. So with that, with the NFS coming online, we could, I mean, basically that brought in the ATM network interoperability. And soon afterwards, in 2005, we had the NEFT system coming up. And then in 2009, the prepaid payment instruments, PPIs as they are called, the regulations for those were formed. Another major step was in 2016 when UPI was launched. Yeah, since then the payments ecosystem has been evolving at a very fast pace, and we'll look at some statistics in the future slides. So currently, if we look at the payments ecosystem, it can be divided into 3 parts. So one part is the non-digital part, which is still which is the paper-based instruments. So there's something called CTS, where the checks are cleared without sending them to the home branches. So we are that's a very small part now, and we are ignoring that. And then there's also this financial market infrastructure part. So by volume, this will be a very large part. Basically, all our financial market transactions are settled over here. It basically uses the RTGS system. So this includes all your TREPS settlements, etc., GSEC settlements, etc. So our focus will be on the retail payments part of this. So the main the ma- the main segments of the retail payments is the first is the credit transfers, so which includes the popular ones like UPI, NEFT, and the NASH system and the MPS system. And then there are the debit transfers or direct debit transactions that happen, which include the NASH system and NETC. This is basically the FASTag system. And then we also have the card payments, both credit cards and debit cards. And then there's a small portion which is the prepaid payments instruments, which includes both prepaid cards and also wallets. So if we look at these segments by volume, UPI is by far the largest segment of this. So basically, last 4 years, if you see, the growth has majorly come from the UPI segment. It has grown from about 2,000 crore transactions to about 13,000 crore transactions in FY24. Just a second. Yeah. Yeah, so overall, the retail digital payments has grown at about 55%, mainly driven by UPI, which grew at about 80% CAGR over these last 4 years. Apart from that, major ones growing were the credit card payments, which grew at about 26.38%. The only system which degrew was the debit cards, which degrew about 17% over these 4 years. So basically, what we can see is that UPI has not really affected the credit card environment as much, but it is started to affect the debit card environment. If we look at it by value, so all these numbers are in lakh crores. So again, UPI has done a phenomenal job growing from about 41 lakh crores to about 200 lakh crores in FY24. So overall, the value of retail digital payments has grown at about 26%, with UPI growing at about 69% and credit cards growing at about 42%. Again, by value terms also, debit cards degrew at about 4%. So the red one is the other transfers that I combined together. So majority of this is the NEFT and the IMPS transactions. So NEFT is about 54% of the total transaction volume in FY24, followed by UPI, which is about 28%, and IMPS is about 9%. So again, NEFT and IMPS are used more for interbank transfers, and the transfer ticket sizes are quite large over there. Because of this, the volume and the value kind of diverge over here. If we look at the per transaction statistics, so again, I have removed the NEFT transactions for here from here because NEFT transactions were about 27,000 rupees per transaction. That was the average. So it kind of distorts the scale. So to make it more readable, I removed that. So if we remove that, then the highest one will be the direct debits. So all the automated debits that you set up in your bank account, that's about 10,000 rupees per transaction. Followed by credit card payments, which is about just over 5,400 rupees per transaction. Debit card payments is about 2,500 rupees per transaction. And wallets is about 370 rupees, and UPI is about 1,500 rupees. Again, the UPI transfer value is a bit distorted. So basically, it includes all these IPO subscriptions and all, and also the tax payments and all, where the transaction limits are quite high. So just from news articles, if you look at only the P2M, that is the person to merchant UPI transactions, the average ticket size is about 400 to 500 rupees. Yeah. Again, over the past few years, as UPI systems have evolved, the acceptance of it by the Indian consumers and the merchants has increased, because of which the P2M, that is the person to merchant transactions, has gone up, has started going up. Now the P2M transactions are more than the P2P transactions. So some of the enabling factors for this significant transformation were: one was the improvements in the payment infrastructure. Overall, the payment infrastructure has improved quite a lot with the introduction of UPI. and also some of the other systems becoming more robust now. Next one was the smartphones and affordable internet access. This enabled people to start making online payments at their convenience, and that has caught up quite a bit. And then the Aadhaar and the India stack. So this picture is of the India stack. So basically, this made it easier and a systemized way for transactions for people to get onboarded onto a digital platform to make transactions. So with Aadhaar and India stack, eKYC has become quite easy now. This has made it easy to start doing online payments. And then there are a bunch of government policies over the last few years which have kind of enabled the digital ecosystem, digital payments ecosystem to take off. Things like Pradhan Mantri Jan Dhan Yojana has improved the financial inclusion aspect. With more bank accounts coming in, people, even the lower economy people also have started doing more UPI, have started accepting UPI transactions. And then the zero MDR for UPI has played a significant role in merchants accepting UPI. So earlier merchants were worried about losing a bit of their margins for the UPI transactions, but with zero MDR from from Jan 2020 onwards, the merchant acceptance has taken off for UPI. And then there was the Digital India Mission, which promoted all the digital payments and financial inclusion. And also the customer behavior over these last 7-8 years has changed quite a bit, and people are now preferring the convenience of quick and fast settled transactions over carrying cash. So second part, we'll look at the payment ecosystem. So this is a generic diagram of how any payment ecosystem will be like. So there will be a consumer and a merchant. So consumer will be given access to a payment instrument by an issuer. It could be a bank, it could be a credit card, it could be an UPI system, UPI ID. And the merchant, he will be acquired by an acquirer bank, or in some cases a third intermediary comes in between the merchant and the acquirer, who makes it easy for the merchant to accept digital payments. And then the issuer and the acquirer talk to each other over a network. So in the case of cards, it could be MasterCard, Visa, or RuPay. In the case of bank-to-bank transactions, it could be IMPS, RTGS, etc. Or in the case of UPI, it could be the UPI network. So in this entire system, everybody gets a small share of the fee so that they can run their business. We'll look at it in the next slide. So that basic system I explained, it is there for all the payment systems. So this is the RTGS system. Again, there will be a originating customer and originating customer bank, and RBI operates RTGS. So that is the network. And then there will be a beneficiary customer and the beneficiary customers bank. So similarly for IMPS, where NPCI operates the IMPS network. So basically, the system will be same for almost all kinds of transactions, just that the players and the flow of funds slightly changes, and the amount of fees that is allowed to be charged slightly changes. This is the UPI system. So UPI systems have slightly more players than what we saw in the IMPS and RTGS systems. So here we have a PSP bank. Basically, PSP is Payment Service Provider Bank. And then there is an UPI app also. So to give an example, so Google Pay or a Phone Pay could be the UPI app that the consumer is using. And then he could have a PSP bank, which is not his bank account. So it could be, so this is basically the @OKHDFC or OKICICI that you see at the end of your UPI ID. So that is the PSP bank. So all the transactions are recorded on their servers. And then all these are sent to NPCI to process the payments and send it across to the receivers, beneficiaries banks. So basically, one thing to notice, there is another layer of banks over here, PSP bank, compared to only one layer of bank that we saw in the earlier system. Yeah. So the entire this entire system operates on something called as merchant discount rate. So this is basically the fee that is charged to the merchant by the payment system, so that everybody else gets paid into the system, and the merchant can start accepting digital payments. Uh, so, uh, so, so I'll just show an example. So the merchant discount rate can be divided into three parts: interchange fee, assessment fee, and the acquirer markup. So interchange fee is the major part. So this is what the acquirer pays to the issuer bank. So because the issuer bank is the one getting the customer and also taking a bit of financial risk, putting out the money, giving out the money to the customer. So he's the one getting the most advantage out, most reward out of this. And then there's the assessment fee, which is charged by the network. So the network basically ensures that it is always online, so that whenever a transaction request comes in, it can verify with the issuer that the transaction is genuine, and then approve it to the acquirer. So because of that, there's assessment fees charged by the network. And then there's an acquirer markup. So basically, this is the difference between the MDR and when you remove these two other parts, interchange fee and assessment fee. So the acquirer, when they talk with the merchant, they kind of try to get negotiated fee. This part of the fee will be kind of negotiable, and based on the merchant, the size of the merchant and all, they try to negotiate this fee. So typically, this is what the division will be. About 75% of the fee will be the interchange fee, which goes to the issuer. And another 10 bips will be about assessment fee, and acquirer markup is about 40 bips. So total MDR will be about 2%. So just to take an example, if there's a sale of 10,000 rupees, sale of goods of 10,000 rupees, interchange fee will be about 150 rupees, assessment fee will be about 10 rupees, and acquirer markup will be about 40 rupees. And the merchant will end up getting 9,800 rupees. Again, this MDR is dependent on multiple factors, and it keeps changing. So credit versus debit have a different MDR regime. Generally, debit cards have much lower MDR compared to credit cards. And also it is mostly regulated. The debit card MDR is regulated by the central banks generally. Yeah, and also merchant type also changes the amount of MDR that is being charged. So something like a luxury hotel and all will be having higher MDR compared to a small kirana shop selling groceries. And also the transaction type and security impacts the MDR. So if it is a card present transaction, that is in-store transaction, generally the MDR will be lower. And if it's an out-of-store transaction, online transaction, or where the person is not present at the point, then generally the MDR is higher to take because of the higher risk associated with it. Also, generally domestic cards have lower MDR in their home countries compared to foreign card in a foreign country. Yeah, so in India, debit card has a MDR limit. So for a small merchant having less than 20 lakh per year turnover, the MDR is limited to 0.4%. And for other merchants, that is those having greater than 20 lakh turnover, it is limited to 0.9%. So just an example, this is from Paytm business website. This is the amount of MDR that they charge. So Paytm is one of the acquirer here. So for UPI, it's a regulatory thing that there's zero MDR on UPI transactions. And for Paytm Bank Wallet, for online they are charging 1.99% and in store about 1.25%. Again, so one thing you'll notice is for all types of transactions, the online one is slightly higher than the in-store one because of the higher risk involved in online transactions. Yeah, again for RuPay debit cards also it's 0% as mandated by the regulator. Yeah, debit cards and all. When coming to credit cards, there are certain network cards like Visa, MasterCard, RuPay, which have lower MDR at about 1.99%. Whereas there are other cards like American Express, Dynads, etc., where the MDR is higher basically the issuer there demands a higher fee. So in order to accommodate for that, the acquirer also charges an higher MDR from the customer, from the merchant. Yep. Net banking 1.99 and 1.25. So coming to the UPI part of it, so until about January of 2020, there was a small MDR which was being allowed on the UPI transactions. But since then, the regulator has come up with a new notification that there would be no zero MDR on UPI. So this has kind of helped in taking of the UPI transaction and increase the merchant acceptability. But this is kind of putting a strain on the system with no MDR being allowed. The amount, the income that all the players in the ecosystem generate has started coming down. So to make up for this, government had announced a subsidy. So in FY22, that subsidy amount was 2,137 crores, which was shared across all the participants in the ecosystem. But in FY23, this was 2,485 crores. But in 24, it was reduced to about 1,411 crores. So the subsidy has been coming down. And also the subsidy is kind of not sufficient to maintain the system to the full extent. So now we look at the ecosystem players. So first, if we look at the issuer, typically it's so there are multiple types of payment systems, and in each one there will be a different issuer. So for a card ecosystem, it will be either a credit card or a debit card. So largely in India, credit cards and debit cards are given out by banks. There are about 3 NBFCs which have the permission to issue credit cards, while debit cards are all done by banks. Yeah, so if you look at the UPI ecosystem, then there's something called the TPSP, Technology Payment Service Provider, or the third-party payment service provider, where we see the apps like PhonePe, Google Pay, and Paytm. If you look at the PPI wallet ecosystem, there we have players like PhonePe, MobiKwik, and PayZapp. So Paytm used to be there and used to be the largest one over here. But after the recent RBI ban, it's no longer a PPI wallet service provider. And also other PPI instruments such as gift cards are there, where players like Quicksilver and all are there. So if you look at the UPI ecosystem, so the top 3 ones are PhonePe, Google Pay, and Paytm. So PhonePe has about 48% market share by volume, Google Pay about 37%, and Paytm has just recently started picking it up at about 7%. By value wise, we see PhonePe is at about 50%, Google Pay is at about 36%, and Paytm is at about 5.5%. Again, regulator sees this as a risk that few players are kind of dominating this market. So they try to set a limit that TPSP cannot have more than 30% market share. But other players in this in the TPSP space haven't been able to improve their systems and haven't been able to beat the 2 dominating ones, PhonePe and Google Pay. So currently, the regulator is thinking of increasing this to limit to 40%, but still PhonePe will continue to be about that 40% level. Yeah. If you look at credit cards, then HDFC Bank is the largest issuer of credit cards, followed by Axis and SBI. They both keep interchanging their positions, followed by ICICI Bank. In debit cards perspective, then SBI is the largest issuer of debit cards. So basically, most of the accounts that we open come with a debit card, and SBI has got the most accounts. So if you look at the acquirer side of things, so as I said, nowadays third parties coming in between the acquirer and the merchant. They are called independent sales organizations. So typically acquirers used to be banks, but now independent sales organizations have started taking market share away from the banks. So earlier the way it was banks used to provide the POS terminal to the merchant so that he could accept the digital payments. and the merchant used to have an account maintained with the bank. But now there are a lot of third-party players which have started coming in. So there are certain third-party players which focus only on the online channel, and then there are certain which focus on online channel, and there are some which focus on omni-channel approach. So card-based networks. So offline channel we see Verifone, Worldline, MSwipe, Innovati, and Pine Labs. Again, Pine Labs and all have started online presence also, but they started with the offline first. And then there's the QR based. So with the development of the UPI ecosystem, the QR based payments have started taking off quite a bit. So here the dominant player is Paytm. It has about 40% market share in the QR based ecosystem. So this we must have experienced in almost all the Kirana shops and all, where the Paytm soundbox gives a audio confirmation of the transaction being done. So this is followed by PhonePe and BharatPe. So coming to the online channels, so online channels, we call them the payment gateways or the payment aggregators. These terms are kind of used interchangeably. So these payment gateways or aggregators act as a software intermediary so that all kinds of payments can be accepted by the merchant on the online platforms. So there are certain players which are online only, like PayU, BillDesk, CCAvenue, and InstaMojo, and each of them has their own specialty. Like BillDesk focuses more on government payments, etc. And omni-channel players are Razorpay, Paytm, Pine Labs, etc., where they offer all kind of services, both offline, online services to the customer. So again, if you remember the MDR chart that I showed, even the payment gateways and all also, even though they collect the MDR, they pass on the majority of the MDR that they collect as interchange fee to the issuer side of things. So CCAvenue, if you see, it's a listed company. So gross MDR, gross payment margin that it collects is about 1.15 percentage of the spends that happen on their platform. But majority of it gets passed on to the intermediaries, network, etc., and they are left with about 8 bips on a net basis. So kind of a tough business over here for the acquirers, where the majority of the MDR has to be passed on to the acquirers, to the issuers and the network. So basically what the acquirers do is they offer other add-on services to their to the payment system that they provide, so that they charge a fee for that. So for example, Paytm, which provides the sound boxes, they charge a monthly subscription fee for providing the sound boxes to the customer. So that fee, it starts from about 30 rupees to 60 rupees, but it keeps varying from merchant to merchant and based on the volume of transactions that they're handling. So this kind of subscription fees, they get to keep it fully. Similarly, payment gateways and all, they have started offering services like invoicing services, bill invoicing services, or inventory management systems, or accounting systems also. Somebody like Razorpay offers accounting system to the merchants that use Razorpay, etc. And InstaMojo is more focused on the small D2C brands, etc. So for these services, they start charging a fee, and that fee they get to keep it to themselves. So as I said, for CCAvenue, they get to keep only 8 bips of the MDR. So these players are more into developing other solutions so that they can offer an integrated solution and charge fee for the other services. So coming to the network, so card networks are majorly 3 card networks: Visa, MasterCard, and RuPay. Of course, internationally there are a couple of more payment networks, but in India we see mostly Visa, MasterCard, and RuPay. Sorry for the spelling. Yeah. So Visa is the dominant player, followed by MasterCard, and RuPay has been fast catching up, especially with the free MDR that is there on the RuPay network. Then another player which has done quite a lot in developing these networks is NPCI. National Payments Council of India. So they have been responsible for developing multiple payment systems, payment networks, through which different kinds of transactions happen. So they developed the IMPS system to enable fast, immediate bank-to-bank transfers via net banking. And then they did the NASH system to allow automated clearing of payments. And also they have the Aadhaar-enabled payment system, where people who don't even have the smartphone can use their fingerprint in order to do these Aadhaar-enabled payment systems. And also from the feature phone, they can do the UPI transactions. And then the latest one, the biggest one currently is the UPI system that they have come up with, and also the NETC system, which is used by the FASTag network. RBI is also involved in setting up networks. So RTGS and NEFT are operated by RBI. So we'll move to the third part of the presentation to see how the participants in the environment, in the payment ecosystem, make money. So I'm taking an example of a issuer, which is SBI Cards over here. So typically, the first fee income part of it will be there for all kinds of issuing networks. So typically there could be a subscription fee, while this is more common in cards. This is the annual fee and the renewal fee that you see. And then there are transaction-based fee income that they earn, which is the interchange fee and the business development fee. So business development fee is a small incentive given by the networks if they meet some milestones. And then there are instance-based fees. So something like a processing charge if you convert your loan into a EMI. If you convert your spend into an EMI, etc. And then there's a default fee if you fail to pay the fee on pay the spend on time, then you're charged with a default fee. And then some reward redemption fee and all is a small part. And then for cards especially, there's an interest income because they offer money as credit to the customer, and either the customer can revolve the money at about 25 to 45% interest rate kind of interest rates, or they can turn it into an EMI where the interest rates are lower at about 12 to 18% range. This side is the income side, and the other side is the expense side. So there are some spend-based expenses. So there are some card transaction charges that they have to pay to the network, that is there. And also the main spends that they do are the advertisement and sales promotions that they do. So all your launch accesses and all come under these two categories. And then there's some data processing charges, which is a small fee. And also the reward points redemption. So most of the credit cards have a reward point system in order to encourage higher spends, and cost is there for that. And also something like petrol refueling and all. There's a surcharge that is charged, and most of the cards are offering a surcharge waiver that they're taking it on their own books. And apart from that, to fund the interest earning assets, they have to take out loans. So for that, they pay out the interest expenses. So we'll look at these numbers for SBI cards. So all these are as a percentage of spends. So net interest income, if you see, which is the interest income minus the interest expenses, that's about 1.62% of the spends. So spends are quite high because the entire spend is counted. So these numbers are quite decent numbers. We'll again see in the next slide how it translates into a ROA in the next slide. Yeah. And apart from that, they earn an interchange fee, which is also a decent part, about 1.3% for SBI cards. And then the other fee-based income that they earn. So these other processing charges, default fees, reward redemption fees, etc. That's about 0.83%. And then membership fee is at about 0.34% of the spends. So overall fee income is about 2.48%. So excluding the net interest line, the next three items. So and apart from that, the service charge and business development are small add-ons. So overall, the card network on a spend of about 100 rupees, card issuer on a spend of about 100 rupees earns about 4.37 rupees. And if you look at the main expenses, compared to the incomes that we see, none of the expenses stand out as much. So sales promotion is one that stands out about 0.72%. This includes all the benefits that the cards provide. Apart from that, rest of them are quite manageable. So reward points redemption is about 0.3%, etc. So these are the direct expenses related to the card related to the spends. So for an income of about 4 rupees 37 paisa, they are spending about only 1 rupee 58 paisa on the expenses side. So if you can see, quite a bit of margin is there for these players. So if I translate this into a ROTA chain, so the interest income part for the card issuers is about 10.3%. So all of these are to the base of the average assets, and fee income is about 18.4%. OPEX will look high because of all the spends that they do, but it's still at about 16.1%. Provisions are something that these companies should be mindful of. If they are able to maintain the provision line, then a significant amount of this incomes will start flowing into the ROA and ROEs. Taxes are at about 1.6%, so ROA comes to about 4.6%. Leverage of about 4.7 times gives an ROE of 22%. So basically, because of the high amount of interest income and the fee income that is there in this system, the companies have a lot of room in order to manage the OPEX and provisions, and they are in a position to take a bit of a risk over here and still maintain a decent ROA profile. So if we look at an acquirer, so here Paytm, so the case over here is quite opposite. So Paytm handled about 18.34 lakh crores of GMV in FY24. And on that, they earned a gross payment revenue of about only 6,200 crores, which is basically about 0.34% only. So compared to the case of SBI cards, where they were earning about 1.3%, here the gross itself is only 0.34. And if you remove what is being paid out to the network and the issuer, they are left with a net earnings of about 0.16% only. Again, Paytm numbers are slightly inflated because they include some UPI incentive that they get also in this number, and which could not be separated out. But typically about 60 to 70% of it goes to the issuer and network, and they are left with about 20-25% of the gross payment margin. So given the low amount of margins that they have over here, they are kind of forced to adopt alternate revenue sources, and we have seen Paytm doing something like a Paytm Soundbox, etc., where they charge a subscription fee over there. And also Paytm has its own payment gateway where the fees are where they charge fee to accept online payments, and they also help the online sellers to set up their stores, etc. Yes, so that was the third part. Coming to the fourth part of the presentation, so recent developments that are happening in the industry. So one is credit card on UPI, which was introduced about a year ago, and it is currently allowed only on RuPay credit cards, but this has started picking up quite well. So currently it has about 12 to 13% of the UPI value share, and here the average ticket sizes are at about 1,200 rupees compared to the 400 to 500 rupees on the regular UPI transactions, UPI P2M transactions. And this is expected to start going up and reach about a 30% kind of a value share. This is still only with one network, RuPay being accepted on the UPI platform. Another development which is happening but hasn't quite picked off is the credit lines on UPI. So basically only banks are allowed to do this for now, Basically, you could take a loan kind of a service on UPI network, but it hasn't picked up as much as the credit card on UPI. One of the main reason is uh, basically the ticket sizes for credit lines on UPI are quite small at about 50,000 kind of range. So banks feel that it is very small ticket size compared to what they offer in the personal loan segment and all. So they're not as forward in pushing this product. Even though during festive seasons and all, we see this being advertised quite a bit. So again, on credit lines on UPI, again, there is a chance to earn a fee income out of this. So there are a couple of variants on this. One is the interest-bearing variant, where it is similar to OD loans. So basically, you'll be given a limit, and whenever you take out a loan, whenever you draw money from that amount, the interest starts accumulating. And then there's the credit fee period variant, where it is similar to credit card. So in this second part, MDR is allowed. On the first one, MDR is still not allowed. But still, banks are not finding this as attractive because there are alternate products already available with them. So OD loans and credit cards and personal loans, etc. And the ticket sizes are quite small. Another development which is happening is UPI going international. So NPCI has set up a subsidiary which is kind of looking at making UPI international. So they are following two methods. One is through acquirers. So basically, in countries where Indian tourists are high, so they are directly tying up with the acquirer over there, so that UPI gets accepted over there. So one example is Singapore. So if you go to Singapore, and there the top two acquirers are tied up with the UPI. So there you can use your Google Pay apps and all to make payments over there. In case the acquirer is one of them, PayNow. If the acquirer is PayNow, which has about 70% market share. And then there's a tech stack transfer that NPCI is doing. So this they are doing in countries where Indian demography is quite high, say Middle East, etc., and also where the indigenous systems are not as developed. So in UAE will be the first country where this is going to go live, where NPCI is transferring the entire UPI tech stack to the UAE regulator, and there they are going to build their own payment solutions. Again, these payment solutions will be interoperable with Indian UPI apps like Google Pay, PhonePe, etc. So that's happening. And another small development that is going on is the National Common Mobility Card. Basically, with the amount of metros coming up in various cities, and also the intra-city bus networks also improving, the NCMC network has started. NCMC cards are useful so that they can be used across all the metro networks, all the bus transit systems, etc. So that one card can be used for all your transit needs. Again, there are still some teething issues going on in the NCMC cards, but once it starts expanding and developing out, it should also be a decent solution available. So the main risk that I see to this segment is the MDR caps. So currently, almost no country has touched the MDR on credit cards, but almost all of them have put a MDR restriction on debit cards. So as we saw in the case of SBI cards, the margins that they are earning are quite healthy. So it could be a possibility that one day the regulators start keeping caps on MDR for credit cards also. So that could be a key risk, and that would be one of the main risks for players like SBI cards. Again, there are no hints from the regulator that this might happen anytime soon. Next is the sustainability of zero MDR. As I said earlier, currently UPI network has zero MDR charges, and that is kind of not sustainable. The amount of subsidy that the government is giving is quite minuscule. compared to the amount of the amount of expenses that the various payment system players are incurring. So earlier, before January of 2020, there was a small MDR of about 25 bips, which was allowed on UPI transactions, and that was kind of sustainable for them. And that 25 bips kind of level of subsidy is not being given by the government currently. So we have to see how this develops. Eventually, some sort of MDR or some sort of payment pricing should come out. But again, it could take some time. And then the alternative payment systems. So before UPI took off, wallets were quite famous at that time. So Paytm especially betted on their wallet business even after UPI came in, but they were kind of had to give it up now. So again, and any other alternative payment systems could have a significant impact on the existing players. So couple of things were tried. There was something called new umbrella entity, which was allowed to be set up, where other players could try to come and set up. Private players could try to come and set up their own payment systems, but that never took off, and currently it's been cancelled. Yeah. So again, that's another risk to watch out for. And then most of the next risk is the compliance issues. So currently, most of the players in the ecosystem are startups and who are willing to grow fast. So because of that, they have kind of ignored all the regulatory requirements or skipped some of the regulatory requirements. So we are seeing that in the case of Paytm, etc. So because of that, they're kind of being capped by RBI. So while in other industries it might have been quite possible to break the system first and then worry about the compliances later, RBI is kind of strict over here, and the compliances issues keep coming up in a lot of these new players. And then RBI has been quite active in taking regulatory actions in order to fix issues, especially those related to KYC, etc. And another risk there is the customer trust. So with the amount of transactions increasing and all, the frauds and all also started going up now. So basically, the UPI network doesn't have as a robust system as a credit card network to issue chargebacks or take care of the complaints. So here the network is not as developed. So if these issues kind of start going up, then the customer trust might be at risk for the ecosystem. So while all this is going on, what is happening to cash? So the first line, orange line, is India. So India, so basically currency in circulation has been increasing. So last 5 years it has increased at about 10.45%. But if you look at the currency in circulation to nominal GDP ratio, this has reached its peak in about FY21 at about 14.5%, and since then it has started going on a downward trend. Currently, it's at about 12% of the CIC to nominal GDP ratio. So again, if we see some other countries where the payment systems are quite developed, China, Singapore, USA, etc., there you will see that the CIC to nominal GDP ratio hovers between 9 to 10% kind of levels. So while currency usage might be decreasing, but I don't think it will go away forever. So there are multiple factors for that. So India has a large informal sector, and there's educating the entire populace on digital literacy is also challenging, and there could be some gaps over there. And then there are customer preference for cash for certain kind of transactions. So because of all this, CAC, while it is on a downward trend, we'll have to wait and see at what rate it kind of stabilizes. So in conclusion, the digital payment systems have seen a tremendous growth over the last 4-5 years, with only debit cards being impacted most, with both UPI and credit cards seeing a decent growth. And so far, what we have seen is UPI has not been impacting credit cards as much as it has impacted debit cards. And with more initiatives by NPCI and RBI, it might be possible that one day debit cards might not be there in our wallets, and only credit card and an UPI system might be there. So for the payment ecosystem players, so payments itself can be scaled up well to get an established customer base, but for especially the acquirer side of the network, acquirer side of the system, that might not be sufficient for them. So they'll have to start cross-selling other financial services. So this to maintain their profitability ratios. So even for the UPI players also, currently the zero MDR might not be sustainable in the long term. So most of the big UPI apps have started cross-selling other products. So we see Google Pay doing loan originations, Paytm doing loan originations, Google Pay offering credit score services, etc. And also some of them are earning through advertisements, etc. But in the long run, if the zero MDR continues, we'll have to see how the system will evolve around it. For the high MDR products like credit cards, currently they have sufficient margins to experiment and still deliver decent returns. So they are in a position to take some risk on the credit side, but the main risk for them will be the high MDR that they are allowed to charge now. So if regulations impact the high MDR that they are allowed to charge now, it will be a challenging scenario for them too. So these are some sources that I used for the presentation. Again, quite a few detailed reports are there by various various consultants, etc. And some interesting books on this topic. So the first book, Anatomy of Swipe, explains the payments industry as if you are a 5-year-old with a very detailed explanation and all. So it's basically meant for those who want to start those who want to accept payments. So for them, it might be a good read to see how the flow happens and all. Payoff is written by a person who was a senior management level at the Swipe network. So Swipe is used by for international transactions and settlements. So it talks more about the international payments aspect of the payments, and it gives a decent explanation on how the international transactions happen. And again, Moneyman is about the Wirecard fraud. Again, a decent book on how the Wirecard fraud happened in the payments industry. So that's all for I have now. If you have any questions, I can take.
Yeah. Thanks. So thanks for collating all this data.
Yeah.
I was just wondering, we do a lot of UPI payments, and it's nice to know that we have 50% share in the general scheme of transactions. But is there any data which says how many Indians are actually using all these payment channels? Because, if you take an average, we are probably doing about 10-15 transactions a month at least.
Yeah.
So is there some data? That is one. And the second is, I would like you to go to that number 3 section where you were showing some data on SBI, and I'll ask it there. So,
yeah. So one of these references has the number. So there are currently about 45 crore unique UPI users in India.
Oh, 45 crores, a third of the population.
So, I think it is the India Payments Handbook which has this data. So, sorry, not the India Digital Revolution which has this data point. So it says there are about 75 crore smartphone users and 45 crore unique UPI users in India.
Oh, excellent. And then in that third section, specifically you were referring to SBI cards.
Yeah.
Where you were showing, that's the one. So here we can see that in FY24, the net that SBI cards was earning was 4.37 minus 1.68. Correct?
So this is related to only the payments part. So they'll have other expenses. There's provisions also there that I haven't included.
Now, what is interesting is the total spends would be everything that happens to all kinds of
Yes,
transactions,
all kinds of transactions.
EMIs and large purchases, payment,
Revolver,
utility
credit
payments.
factors, also.
So you add up all of them.
Yeah.
Then you say that interchange income was, for example, 1.3% of
1.3.
everything
Yeah,
of the total spend.
total spend. So
Okay.
interchange fee will be on all the spends. So that is kind of correct. But net interest income, it will actually be only earned on those who end up paying the interest. But that's kind of not represented here. It is taking the total spends only here.
Yeah, because what I'm realizing is that 2.5% and 1.6%, that's so majority of the earnings for these payment issuers, and I'm guessing the same will be the case for HDFC or American Express or everybody else.
So all have got this decent margin profile that is available with them. Just that as long as they're able to maintain their asset quality and all, they should be generally in a good position.
So yeah, these basically this universe of companies, that means, are very, very stable, and it's a very good investment case.
I mean, you could say that, but if you see the decline for SBI cards in particular, it's been quite stark. So net interest income has been coming off from about 2.7% to 1.62%. So basically, BNPL has started kind of impacting them. So earlier, a lot more people were taking this, what do you call this, revolver credit. Now, because of BNPL, SBI cards has been forced to issue EMI credit, which is at lower interest rate. And interchange fee is also slightly coming off because of competition from UPI, etc., alternate payment channels. But yeah, largely it should be a fine. So some of the private banks which don't report these numbers out separately, they should be in a much better position than what we have.
Oh, so they are better than this.
Yeah.
No, I just wanted to know whether these are the kind of numbers that one can expect for the other companies also.
Yeah, it should
So,
be.
Thank you.
Hi, Prithvi. Thanks for the presentation.
Yeah.
If you could just help understand the big picture here, so possibly in terms of, I mean, what's the overall volume or say value of transactions that happen, how it's divided across say different platforms or channels, who are the bigger players, and then the profit pools that accrue to the different say channels, and then what is the level of penetration so that it will possibly put things into perspective. I think that'll be very helpful.
So if you go by value of transactions, UPI is at about 200 lakh crores. And then there's this big part, other transfers. These are all bank-to-bank transfers. So IMPS and NEFT are there. So there the kind of revenues is kind of fixed. It's like slab-wise 5 rupees after 10,000 rupees and 20 rupees after 2 lakh rupees kind of thing. So again, here also the interchange fee and all are there, but compared to what we see in say credit cards, there the revenue potential is much lower. So these are earned by banks. So your bank from which you transfer the account and all, money and all. So but majority of the profit pools are there in the credit card space. So sorry, the credit card numbers are kind of lost in this. It should be at slightly less than 10 lakh crores kind of transaction value. So we can see in case of SBI cards, the average MDR was about the interchange fee that they earned was about 1.3%. So for the industry, you can take slightly at around that levels. So you'll get how much the revenue potential is available.
Hi. Just wanted to understand who keeps the float. Is it the network or the acquirer? And what is the income from the float?
So the acquiring bank keeps the flow. So they are the ones who will get access to it first, and they are the ones getting it.
So in that Paytm slide, can we do we know how much float they earn?
I'll have to check. It should be there.
Yeah, it should be decent enough.
It should. I mean, Paytm case, I'm not sure, but for other banks, it should be decent enough. Yeah.
Thanks.
Great presentation and insights, Prithvi.
Yeah, thanks.
So I just wanted to ask you some more details on these credit cards based on UPI, and would it be threat to current credit card companies, or they will switch from Visa to UPI kind
So-
of play?
What we are currently seeing is it's more of being a threat to regular UPI transactions, which are being replaced by credit card on UPI. Again, so there are the credit card on UPI players who are offering this service. Their reward rates and are all not as good as what the regular credit card players are offering because of the lower MDR potential over there. So as of now, it's not a threat, but some of the lower value transactions are going to that space. So these were traditionally also being done by UPI transactions or cash, but they're now being replaced by credit card on UPI.
So who is issuing these credit cards on UPI? Is it the same
Yeah, same.
players of UPI like banks or Paytm kind of companies?
No, banks are issuing. So
Right.
HDFC has a decent RuPay credit card network, RuPay credit card portfolio, which you can use as credit card on UPI.
So RuPay is on UPI, is it?
So RuPay
Or is it a separate thing?
it's a separate network, card network like Visa and Mastercard,
Yeah.
which is developed by NPCI. Now, what NPCI has done is those RuPay cards only can be accepted on UPI network. So it is not open to other card networks yet. So Visa and Mastercard are not allowed yet as of now.
So in a sense, if these traditional banks start issuing UPI credit card,
Yeah.
they will affect the other acquirers like Paytm, Google Pay.
So Google, so that I'll show. Yeah, so in this network, the RuPay credit card will be this part, PSP Bank. So Google Pay is on the UPI app provider. So that card you will eventually use on either Google Pay or Phone Pay, etc.
So you can't use that on a
You can use it as a normal card also.
POS or online card.
Yeah, that you can do. So when using on the UPI network, it is like this.
So for example, if HDFC Bank issues a RuPay card, which can work on UPI, so they will bypass, then you don't need Paytm. You can just swipe that card, or you can save that card on your mobile phone and use it on online, etc. Isn't it?
Yes. So when you are using it on UPI network, when you are saving it on mobile phone, you will be using one of these apps, UPI apps. That could be Google Pay, Phone Pay, etc.
No, why? There are options when you have to make an online payment. You have options like credit debit cards or UPI or net banking, etc.
Yeah. So when you select UPI, it will ask you to select an UPI app.
Okay.
So that could be Google Pay, Phone Pay, where then again you will select the credit card.
Okay.
I mean, I can show it offline to you later on. Yeah.
So it's in that sense, it's not really
No.
a competition to the earlier acquirers like Paytm and
Not directly. Yeah. Actually, so banks are the ones who are kind of more keen on credit card on UPI, because currently on regular UPI transactions, they are not earning anything. MDR is 0.
Yeah.
Whereas on credit card on UPI, there's still a possibility of small MDR there. So banks are now actively issuing RuPay credit cards. So if you have a regular credit card, you can just go to your bank app and they'll be willing to issue a RuPay credit card as an add-on to you.
And then there is another feature in UPI where they are going to offer credit
line on your
credit line.
Yeah.
So how will that require the credit card or not?
No, it won't require a credit card. It will be kind of like a personal loan on the UPI platform. So you could go to HDFC Bank. ICICI Bank is currently doing it during the recent festive season. So you'll get a pop-up that there's a credit line facility available for you.
So when you are selecting UPI payment online,
Yeah.
you will get that pop-up.
Yeah.
Whether you want a
Credit line facility. Yeah.
Okay. And it will write on your savings bank account.
No, so
You said it's like a OD facility, right?
it's like a OD facility, but you cannot use that, get that money into your bank account. You have to spend that money when doing the payments, etc. So
Okay.
OD in the sense that how the interest rate is accrued.
There won't be a lien on your savings bank account balance.
No.
It's like a personal loan.
It's like a personal loan,
Oh.
additional credit line. Yeah.
Okay. Thank you.
Hi. So, I am using a common mobility card,
NCMC. Yeah.
but only one problem. While it is very convenient, there is no facility like
Recharge.
ATM and all that to link your bank account
Yeah.
or something like that. So what happens is you have to keep, adding money every time you run out of this thing. So while technically I can use it to shop and everything, but I have to preload. Probably that is the reason why that card is not doing well.
Yeah. So it's still a new card.
Yeah,
if-
while I am using it
Yeah.
in bus, I am using it in all three metros because I have tried
Yeah.
all that. But when you go to a merchant,
Hmm.
you have to load it.
Load it. Yeah.
So, it is not like debit card or any other card. If you do transaction through Google Pay or Paytm, then your bank account is linked. Here, I think they should give that facility.
Yeah. So that is part of the future plan. It's in the pipeline. So basically, currently that recharge facility is a kind of a problem now. That's being worked on. Yeah.
Any questions on Zoom?
Just one question who wanted to see the reference slide again. I'll just leave it at that slide.
If there are no more questions, thank you so much, Prithvi, for a wonderful presentation.
Thank you.
Whenever things got rough, I always remember what my father used to say.
Running a business does test a man, my son. There are ups and downs, glorious highs, and sometimes a low that leaves you feeling defeated.
The character of a man and the character of a business are not very different, are they?
Yes. But when the chips are down, we must stand up, dust ourselves off, and motor on.
Volatility. It's a funny thing. It makes you question yourself and wonder if you've made all the right decisions.
Sure, you can question some of your decisions, but stay steadfast on your goals.
Dad always said, there are no shortcuts and no quick profits.
There are no free lunches, are there? There is only one
right way.
At PPFAS, we think like Rahul and his father. That volatility is a fact of running a business. And buying equity shares is like owning a part of that business. We use value investing principles to manage your money. This means we invest in the right businesses at reasonable prices and for a longer term.
PPFAS Mutual Fund. There's only one right way. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.